Hi there, Jarrad Mahon from Investors Edge Real Estate, bringing you my latest Perth property market update for October. I'm going to take you through what's happening in the sale market, the rental market and investment options to check out at this time. Now, what's happening with the sale market is the number of properties on average was sitting at 10,400 for sale over August and September, and that's increased by about 5% with lots of extra properties coming on the market in October. So we're now at 10,800. And it's typical to see the number of properties increase as sellers want to take advantage of what's usually a good selling time of the year. However, the number of properties being sold every week isn't actually increasing over the last 4 weeks. It's staying about the same. So there's lots of extra choice out there for buyers at the moment. There's lots of extra competition between sellers, and if you are going to be sold before Christmas, you really need to be presented well, marketed well, and use an agent that's going to give you feedback from the market and negotiate the best price so you can make a decision. Now, you really want to be sold over the next 4 to 5 weeks because come December, things are going to get very quiet. You'd have to come off the market, and buyers don't usually return until January. Now, what we're seeing in the number of properties heading up month on month is that we're now edging our way back closer towards a neutral market. And I expect that we'll probably get to that 12,000 properties for sale where we're normally classified as a neutral market in the first quarter of next year. What's happening in the rental side is that the rental market is stabilising, and we're still at 4% rental vacancy rate, which is holding tight, and the median rent is sitting at $450 per week, unchanged for the last 4 months, and the number of properties for rent is also unchanged relatively, sitting at just below 6,000 properties for rent on the market. So that's good news for landlords. I expect rental prices aren't going to drop further in most suburbs, and what we're finding in the market at the moment is there's generally been about a 10% drop in the rental price over the last year, so expect that when your property's coming up for release. And it is still a competitive market out there, so make sure that you're choosing a property manager that's got a leasing manager that's really dedicated to finding that tenant. They can do after hours and weekend viewings, and they really need to go to the complete effort that you would for a sale, so using professional photography and those negotiation skills to get you the best rental price. What's happening over in the investment options side of things is that it's a good stage of the market for house and land packages. I expect that the outer areas is where the majority of the growth is going to be over the next year. And with those packages, I've been doing a bit of work behind the scenes, and we've come up with some pretty creative housing designs, which we're calling dual income houses. And what that involves is, under the one roof, we're managing to design a property that has a 2x1 and a 3x1, or two 2x1s side by side, so two rentable spaces, and we're able to boost our rental return from what is typically 4.5–5%. We're able to boost it up around 6.5%, so it's going to be well and truly positive cash flow on the property. And there's so many benefits to positive cash flow. Means that you're not getting held back on your serviceability. I'd rather have cash in my pocket each week rather than negative. The other major benefit is, as interest rates do come up, whenever they do, you're going to be insulated against it. So email me if you're interested to find out some more on those dual income designs. I'm pretty excited about them myself, and looking at using that kind of strategy for my own portfolio. If we're looking at an off-the-plan purchase, you really want to be thinking through the whole time that it's going to take to build such a complex, and the build time's typically 12–14 months, so you really need to be buying in areas that are going to keep their popularity and demand over that time. And off the plan can be a bit more risky. Off the plan's really suited to a purchase in a self-managed super fund, and if you are looking at that kind of purchase, let me know and I can help you discern your areas. I'd certainly be more focused on the lifestyle locations and areas that are going to stay in demand. With established areas, if you're looking to do a development sometime over the next couple of years and you want a property that's going to have subdivision potential, I'd be looking at the proposed rezoning areas of Marangaroo to the north, quite like Forestfield to the east, and Kubillup down south. All those areas have got new planning schemes proposed, and at last check you're typically looking at about 18 months before I'd expect them to get through. You can touch base with the council and see what's the latest on each of those. If you're looking at areas that are already subdividable, if you're looking for a little project, either a house behind a house or a small apartment project, I really liked the areas of Linwood to the southeast. I would check out Girraween to the north. It's a bit of a shitbox area, but there is still properties with some reasonable returns. And I'd also take a look at Bayswater, the inner east, and that's a great little suburb, but you do have to be selective in there. Make sure that you're getting 15% plus returns if you're just doing a duplex, and you really want 25% plus if you're doing a small apartment complex. Happy to advise you and help you work through your numbers and make sure it all stacks up before you buy. Don't contact me afterwards. That's really a good snapshot of where we're at in the Perth market. If you want some advice specific to your situation, feel free to send me an email or give us a call, and only too happy to help. And I'll catch you in the next month.